All right, guys, so let's have a look at stock market. So SPY chart, this is currently daily chart of the SPY. So 0.5% down. OPEX is over, option expiration. And there are a few things I want to basically show here. And what do I think? So we know that S&P 500, year-to-date positive, new all-time highs, sitting near its all-time highs, but it's been driven by only a few names, and you can see the biggest company, the biggest gainer year to date, like top three, Nvidia, Eli Lilly, Meta. So among these 3-4, the only thing that chip maker, basically Nvidia, who was driving everything up, reports 22nd, I believe, earnings next week. So basically, and this will set the tone. But since option expiration is over, and usually second half of the February is pretty volatile, and I can see by looking at the SPX put to call ratio that people were basically positioning themselves for volatility by picking up some insurance. Anytime you see this index basically ratio go up above 1.3, you can see from February 9th, you can see 1.5, 35, 1.5, 1.7, 57, and Friday as well. So you could see that throughout the last week, a lot of people were hedging because maybe some people were just rolling their insurance, right? Basically, every time I see this kind of situation, market typically just moves at least like 2-3%. But given the seasonality of the year, basically, charts, we can easily pull back 5%, which is not really big of a deal. It would put SPY, if we just take a look at it from all-time highs, basically 4% move would put it right at that 50-day moving average, which is in an uptrend. This yellow line on my chart, I can bring it up right here. You can see all moving averages are uptrending except for the past. You can see this gap down move where we had pretty big move, and we did fill this gap. So 100% of the time, 100% of the gaps in S&P 500 fills it. So that's what happened. So we filled the gap. Now you can see for the past 5 trading sessions, 5-day simple moving average, it's basically flat. That means we didn't do anything for the past 5 days. So if it wants to roll over and test basically 50-day moving average, it would be purely very, very easy. It can happen in 2 trading sessions. If Nvidia basically reports weaker guidance, I don't know what they report, but even if they report strong earnings and market decides to take a profit, we can easily test 50-day moving average. But a lot of people think that into March we may be seeing like 10% pullback, which would put basically SPY all the way at its 200-day moving average, which is around 450 level. So also, if you look at the basically stocks that are above their 50-day moving average in S&P 500, you can see only 60% of the stocks are above their 50-day moving average. You can see anytime we rolled over, last time when we rolled over late July and beginning of the August, you could see we were somewhere right here, and you saw what happened, right? So it's perfect time when you see almost 90% of SPY trading below its 50-day moving average. That's when you have better odds, better risk reward to go long. But right here, right now, on any small like 1-2% pullback, risk reward, I don't think it's smart to do so, or it's not smart to do so any time of the year or any time at all. So I'm waiting for a pullback. You can get the point here, and here are the components of the SPY, right? So 500 stocks, you can see almost 60% of it, S&P 500 positive 5% year to date. But you can see almost maybe 60% of it flat or negative. You can see bottom performers here. Like there are a lot of stocks that are down more than 10%, 5%, and only a handful of names actually above 5%. So if we just start from 5%, only 160 names are basically plus 5% positive or more year to date. That doesn't mean that market, it's basically broad-based market, broad rally. It's not. So which means anytime these big names, because everything in this list, if you just pull whatever you want to look, just let's take a look at top 3 names, right? If you look at the Nvidia, it's overextended. Anytime it pulls back, it can definitely pull back 10-20% just back to its 50-day moving average, because it doesn't like to stay overextended like it is right now, and it will catch up to 50-day moving average. When it does, you can see market basically pulling back. Meta, another name after earnings, pretty big move up, chopping around at the moment, but anytime it can pull down. Eli Lilly, another name, but it's a healthcare name. Ozempic drug this year, pushing this name, but in 2023, it was one of the biggest contributors to Sp500 as well. But a lot of people don't mention it, and a lot of people think that it's AI. But this name is about to be top. Is about to go into Magnificent 7 actually, or top 5 basically stock. So maybe in the next few years it will be $1 trillion stock, but at the moment market capitalization of Eli Lilly, let's take a look, I think it's 700 something billion at the moment. But I'm watching the market from here basically to the downside for the rest of the February and beginning of the March. So $742 billion. So if it does pull back, since we know SPY is market cap weighted index, any of these large cap stocks pull back, you have a recipe for a decent pullback. You can see Apple has already started doing that. Adobe started doing that already. There's Microsoft started doing that already, trying to pull back, hinting that it's about to roll over. And if you take a look at the Google, it has been coming down. It's at its 50-day moving average already. If you look at the Amazon, same thing. It can pull back to its 50-day moving average. And Jeff Bezos sold almost like $6 to $8 billion worth of stock just last week alone. But that's the rent. That's what I'm watching for the rest of the February. Thanks for watching. See you in the next one. Peace.